Welcome back to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. Today's Saturday, December 24th, Christmas Eve, and I wanted to come in, make this video along with a few other ones that I think are super important, finishing up the topic that we started with what the report that came out as of July 2021 by the Consumer Financial Protection Bureau. And this report is very disturbing to me, and it should be disturbing to you. And the reason that I'm really trying to emphasize this report and the different factors that go into this report is because it has to do with seniors. And these are seniors that have a traditional mortgage, which requires monthly mortgage payment obligations until their total loan balance is paid off. And the report cites a very disturbing total number of 682,400 seniors that are delinquent in their mortgage payments. And another 83,000 seniors of the 682,400 that are likely facing foreclosure. And in my previous video, I said that I have my own personal opinion on why these seniors are in this position, because if you understand that there's over $10 trillion of housing wealth that is being attributed to seniors, then you have to ask yourself, what is the likelihood of all of these seniors, the 682,400 seniors that are delinquent in their mortgage payment, which could have been helped through getting a reverse mortgage? Because immediately after they get the reverse mortgage, the requirement for a monthly mortgage payment disappears. And that has immediate effect and impact on not only their overall saving reserves that they have, but also on the limited monthly income that they have. And fundamentally, you must understand something, that every one of these seniors, before they reach this position where they are delinquent on their mortgage payment, you have to assume that they've done everything that they can and they've used all their resources, all of their savings, all of their investments to make sure that they don't go into this delinquency situation that they're in right now. And if you're watching this video and you're a senior and you have a mortgage payment, and you say to yourself, I'm not going to be in this situation, I have enough money, I implore you, if you're not going to watch any other video that I've done, this is the one video that I would encourage you to watch, because if you don't think you have something in common with these people that are in this situation, with these seniors that are facing foreclosure, with these seniors that are in a situation where the report cites where they have to make a decision between eating food and making monthly mortgage payments, between their lack of confidence in being able to make their next monthly mortgage payment, you do have something significant with these seniors. And it's not the fact that, God forbid, you're not in delinquency right now. It's the fact that you're obligated to pay a monthly mortgage payment. And within 4 to 5 payments being missed, the lender has the legal right to come and start foreclosure proceedings. And that's why it's so important for me to be able to take this topic and approach it from different possibilities. Now, in this topic the topic coverage that I want to do today, the way I want to approach it is, in my mind, when I sit down with seniors, they have set preconceived limitations when it comes to the idea of the reverse mortgage. And I've done videos where I say, if I say the word reverse mortgage, that has a Pavlovian response, that has a triggering response, and the senior automatically, or their adult children, or even some of the financial advisors get triggered, and in their head, they associate the idea of a reverse mortgage with foreclosure, with losing their property, with all these negative thoughts, when in reality, the reason I keep going back and harping to the fact that these are people that have the traditional mortgage, a similar to mortgage that you have, a similar mortgage where you have the monthly obligation to make monthly payments. And if that payment can last another 5, 10, 15 years, well, you're not out of this danger zone of being in a safe, foreclosure-free environment where the bank can say, oh, well, he's like 5 years away, we'll give him a pass. That's why it's important to listen and watch and participate and take notes and consider your own particular circumstance. Because if you're thinking that the bank wants my home, when I say to you a reverse mortgage and your mind goes to the bank wants my home, which is a version of saying I won't be on the title to the property, or the bank will be on the title to the property. And as soon as those words register in the mind of the senior or their adult children or the advisor, then they're completely shut off. And the reason I keep going back to this, what I call a triangle, what you've entered into with the lender, is because this legal obligation that you have is on the books right now. And you'll see what I mean in terms of a 30-year span and what that obligation can relate to when it comes to a foreclosure, because you're not out of the danger zone. And excuses to the bank such as I'm on a limited income, or I don't have employment income, or I lost my spouse and I don't have their income, or I ran out of money, is not a legal defense to your mandatory legal obligation that arises when you sign what? A promissory note. So that's why I keep trying to take this concept and approach it from different points of view, because in one of these videos, it's going to click with you that you have this situation that you voluntarily agree to. And what is that situation? Well, the situation is between a relationship that's contractual, it's legal, and it's between you, that's you, and the bank, who's the lender, against what? Your home, which is what? The bank's collateral, the bank's security. And your first and foremost obligation in signing the promissory note, which we refer to as a legal IOU, is that the promissory note establishes the terms of the loan. So if I say in this example that we're using that the loan amount is $400,000 at 5% and it's for a 30-year fix, well, it produces a payment of $2,147.97. And that's over a 30-year period. Okay. Now, the reason I say to you that when the person thinks the bank is interested in getting my loan, the bank is interested in getting my home, and I disagree with that, is because here's what I cite in terms of what the bank's desire is to let this relationship continue for the full 30 years. Because when the bank lends you $400,000, at the end of the 30 years, the bank is going to get $373,000, and that's the round number. It's $373,023. But the bank is counting on the total interest that it can accumulate on this $400,000. So the bank lends you $400,000, but is able to get $373,000 on this $400,000. That's why the bank is encouraging you, cheering you on to keep making monthly mortgage payments, and doesn't want to foreclose on you, because as soon as the bank forecloses on you, the bank loses the ability and the opportunity to collect all of that other future interest. Now, automatically, I know what you're thinking, and you're thinking, well, the bank's going to get my home. The bank can't get your home. Because in fact, what the bank is going to have to do in order to proceed with the foreclosure is incur legal expenses, file court papers, go to court, show that you violated the terms of your promissory note and that you're behind in their mortgage payments. And then on top of it, they have to continue with eviction process. Then once they get you evicted, and these are costs that are incurring, this is money that's accruing, then they have to, once they get you evicted, they have to sell the property. And then they have to get the money from the proceeds to cover all of these expenses. Will the money come ultimately through these processes and through the sale of the home? Yes, the bank has that legal right to do it. And the reason that they do is because of the fact that at the beginning of your loan relationship with the bank, you agreed that the house is going to be a collateral and that there's going to be a lien against the property through what? A deed of trust. And I'm saying this and I'm putting it together as kind of putting this furniture on the stage as a way of going and putting things in perspective of where you are right now and what you've agreed to. And that's why I say you're not that far off from where these people are if you have a monthly mortgage payment, because these people that are delinquent, they all have a mandatory monthly mortgage payment just like you do. So the bank is not interested in foreclosing on the property when the bank can get all of its accrued interest, and that's what the bank wants. But will the bank go through a foreclosure proceeding to collect and get its money, which is that $400,000 plus whatever its costs are if it has to foreclose on the property? Absolutely. Okay, and that's what the key takeaway is in today's video, is that if you're hesitant and not moving forward to get out of the situation that you're in right now, because here you have no legal protection. And that's the key takeaway. When you have a mandatory monthly mortgage payment, and that agreement arises and that obligation arises out of you getting into a promissory note, that the promissory note not only establishes the terms of your loan, but it also makes you say, what? I promise to make monthly mortgage payments on time every month. It also says that I'm going to continue making property taxes, homeowners insurance, and if applicable, a homeowners association monthly premium. But you also agree that you're going to maintain the property because it's the bank's collateral. Okay, so this relationship is in place right now if you have a mortgage payment. But as soon as you get into a situation that you understand that the bank doesn't want your house, in the sense that you're not going to be off title and the bank is not going to be on title, and you understand that the bank's ability to proceed with a foreclosure when you're in violation of the promissory note arises and comes as a result of the bank having a lien interest on your property, this hopefully goes away because you're no longer paralyzed and thinking that I'm not moving forward and considering options because the bank is going to be on title. This goes away and you look at the protection that is available to you is through the reverse mortgage. And why is that? Because in the reverse mortgage, the dynamics are exactly the same. You still have the bank, you still have the home as the collateral that the bank is lending on, and you still have a promissory note. But what happens immediately? Immediately after you get into a reverse mortgage, you no longer make a representation or an agreement to the promissory note based on your obligation to make mandatory monthly mortgage payments. You still have the obligation to pay continued property taxes and homeowners insurance, and you still maintain the property. But understand this, you're doing this even if there was no mortgage on the house. You're not going to have a house that you're not going to maintain. You're not going to have a house that you're not going to pay insurance on. You're not going to have a house that you're not going to have property taxes be current on, because that's going to have its own legal complications and problems. But when you understand that you change the dynamic of this agreement with you and the lender through getting into the other side, what I'm calling crossing the bridge, where you're on this side and you have these obligations, and when you cross the bridge and you come over to this side, you no longer have a mandatory monthly mortgage payment. Well, that changes everything. Okay, because now the bank is not expecting you to make monthly payments. And the reason I have this, and this is really key for you if you have a mortgage payment and you're in a relationship with the bank where you are obligated to make monthly mortgage payments. This is really key for you to understand, because here's a 30-year span. Here's a 30-year mortgage. You got a loan amount for $400,000 at 5% for 30 years fixed. That monthly payment is $2,147.29. We already established that the bank's expectation is to collect in this 30-year period $373,000 of total interest. But we also have established that in previous videos, what has happened is, as interest rates came down and property values came up, you refinanced. and you took money out and you started the new 30-year period. So this bottom line is super important, and that's why I say to you, this is crucial for you to get if you're watching this and you're a senior, or you have a relationship with seniors because you're a financial advisor or CPA or someone that is able to guide them and help them. This is the key, because this is you. This is you now. Okay, and when you got this mortgage for 30 years, and depending on when you started this relationship, you have to now see where your age is. Okay, and I did this based on this $400,000 at 5% with a 30-year. I did it when, if one senior, for example, is at age 50 and they start this relationship, well, 5 years into this mortgage, that senior is now 55. 10 years into this mortgage, that senior is 60. Chances are they're still working. 15 years into this mortgage, which is the halfway point, this senior is now 65. Well, 20 years into this senior is 70. Most likely they're not working anymore. But what's happening here? Well, they still have a 10-year span before they finish the race of not having to make a monthly mortgage payment. Now, what's happening? In this 10 years that they have left, they still have a commitment to make a monthly payment of $2,147 for the next 10 years. Now, what else is true? Well, when they got this mortgage back here, okay, in year number 1, when they were 50 years old, they were working and they had income, and they had a significant higher income than they do when they're on a fixed monthly mortgage. And they needed that interest write-off to offset their employment income. But now here, they're 70 years old, they still have a 10-year span, but guess what? This monthly mortgage obligation hasn't changed. It's still $2,147. Now, granted, more of this money, more of this $2,147 is going towards their principal reduction than it is paying interest, but they're still paying 10 more years of interest. So over here, the bank, if you add up and you do an amortization and see where they would be 20 years into this, the bank has probably gotten at least maybe about $250,000 of their interest. But the senior, his commitment to making this 10-year payment doesn't change $1. He still has to pay $2,147. Now, what else is happening? Well, this house that the senior got back here is now over here. And what has happened? Well, through appreciation, the property has increased in value. And their loan amount that they owe in relation to the property equity and housing wealth is still significant. So that begs the question, why is the senior continuing to make unnecessary monthly mortgage payment? I don't mean unnecessary in the sense that they're not legally obligated to pay it. I'm saying unnecessary in the sense that they have a significant amount of equity already built into this property, and they're on a fixed income, but they're still having to make a $2,100 monthly payment. Now, the scenario even becomes worse, because if you are this senior and instead of at age 50, you got this loan at age 55, well, the numbers just keep going. And as you reach over here, with 25 years into this mortgage, if you're 50, you're at age 75 now, and if you were 55, you're at age 80. Do you really want to live in a house when you're 80 and continue making monthly mortgage payments for like another 5 years when you're on a fixed monthly income? I keep going back and saying, why are these seniors in this position? Well, they're in this position because they ran out of money. They ran out of money doing what? They ran out of money making a mandatory monthly mortgage payment. If they didn't have to make this mandatory monthly mortgage payment, and they still had the security to live in their home, and that's what we're talking about, is it doesn't have to be, if I don't make a monthly mortgage payment, I don't get to live in my home. It does in this scheme. It does in the scheme that If you and I get into an agreement and your agreement requires you to make monthly mortgage payments to the lender, and your failure to pay monthly mortgage payments triggers the bank to go into foreclosure, then you're required to. But if I could put another alternative path in front of you, and I say to you, in this alternative path, the bank will take in consideration the significant amount of equity that you have, your age, the fact that you're 70 years old and you have all of this equity in here, and that you're on a fixed monthly income, and for you to pay $2,100 is difficult or impossible because you lost your job, you don't have income from a spouse who's also in the mortgage with you. All of these factors that are plaguing these people. In other words, if I sit down with these seniors that are delinquent on their mortgage payment, each one of them is going to tell me that, look, I'm on a fixed monthly income and I can't afford to pay $2,100. And I'll say, yes, you're right. And I'll say, what else? They'll say, well, I lost my spouse and I lost their income. I say, I'm sorry, you're right. What else? Well, I don't have any more savings. I spent all of my money making the mortgage payments, but I ran out of gas because I reached to year 25 and I still have 5 years left. I still have 2 years left. I still have 1 year left. And I say, yeah, you're right. But I'm sorry that none of these life events amount to a legal defense for you to not meet your obligation that you signed and you voluntarily agreed to when you agreed that I will lend you $400,000 and I expect to get this total interest back. It's just business. You need to pay me. And if you can't pay me, I have this interest in this house. I'm going to go sell it. I'm going to first recover my undue balance wherever you are in this scheme, if you have 5 years left, if you have 10 years left. And then I'm going to also have you reimburse me for all of my legal expenses and legal costs. And then whatever is left, I'm going to give to you. You don't have to be in that situation. And you don't have to be in this situation if you simply understand that the bank doesn't want your home. The bank wants the total interest that it's due on the end of having this legal relationship with you where you borrow money. Now, the bank can get that interest from you in two ways. It can get it from you when you're young and you're 40 years old, right? You're 40, you're 45, and you get the loan and you're working for the next 30 years, and by the time you reach 65, 70, your house is paid off. But people are not coming in. Seniors aren't coming in, meeting with me at 75 with a house that's paid off. Very few of them are. The majority of them have a substantial debt. The majority of them have fixed monthly incomes. The majority of them have a mortgage payment. What they're counting on is their ability to be able to use some of this equity. And by qualifying for a reverse mortgage, the conversation of having to make mandatory monthly mortgage payments goes away. And that's what I keep harping on, because unless and until you understand that you as a senior watching this and understanding that your mandatory monthly mortgage payments do not end till you reach 30 and you finish this race, you're on the hook and you're in this danger zone. You have no legal protections. None of these excuses, none of these life events provide you a legal protection or a legal defense to the banks or the lenders' requirement of you to make monthly payments. And when you have no legal protection, foreclosure is an absolute possibility. And that's why 83,000 of these people have the situation where they're at. Okay? And I'm trying to point this in every possible way that I can, because a lot of people think and they distinguish themselves and say, I'm not like these people, I have more reserves, I have this, I have that. You may have more reserves than these people, but if you still have an ongoing mortgage obligation, then account for losing your spouse and their income. Account for life events such as long-term care possibilities that now compete with your monthly mortgage payment, because now you want to stay at home, age in place, and you're going to have to pay for in-home care. In-home care can be $4,000, $5,000 a month. And if that monthly income for in-home care is competing for all of your other expenses, and it's also competing for your monthly mortgage payment, how much money do you have in reserves to not worry about potentially another 10 to 15 years of having to make monthly mortgage payments? So I hope that you get the big picture, because the big picture to me is that if you understand that you already are in a situation where if the bank wants to enforce an agreement after you have failed monthly mortgage payments, the bank does not need to be on title. The bank can simply exercise its legal right to foreclose based on the fact that it has a lien and the house is a collateral property. Second point, the bank is not interested in foreclosure because the bank wants what? The bank wants this huge amount of money that it can collect in the total interest. And every time you went back and you started another refinancing term because interest rates came down and property values came up, you extended this 30 years. It was for a lower interest rate, but you still have more money that you're going to pay to the bank. So that's where we are with this. The other 2 points that people seem to get hung up on when it comes to reverse mortgages after this, the bank wants my house, is that there's going to be no equity left, which is the equity stripping idea, that I'm going to have no money left for inheritance. And I've really done the best that I could in explaining this relationship as it relates to equity, home values, how much money is going to be left in a group of other videos that I have. And you need to look into the playlist to see the breakdown of what those videos are. If the cost is a determinative fact for you and not moving forward with a reverse mortgage, that's my next big tackling spot, because people who keep thinking about the reverse mortgage and they talk themselves out of the cost aspect of it, what they're not getting is 2 points. Number one, the cost is not out of your pocket. The cost comes out of literally the amount of home equity appreciation that you have built, and it's minimal compared to the situation where, God forbid, you could be in a foreclosure situation. If you're at the risk of foreclosure, and this is the point that I made in my last video, and I said, if I go to every one of these 682,400 seniors, and I say to them, I can go back in time and put you in a reverse mortgage if you're qualified, so that you wouldn't have to be facing foreclosure when you're 75, 80 years old. Would you elect that option? I can't imagine a single one of them saying, no, Benny, I choose to go through foreclosure and have the bank close on me, because the idea of having a tiny portion of my housing wealth pay for the protection of the insurance in place for me is too much for me to handle. And that's why I say I need you to have perspective. I need you to have a bigger frame. I need you to be able to kind of not throw the baby out with the bathwater. I need you not to be triggered. I need you to be able to watch these videos detached from having an emotional reaction to what you know about reverse mortgages. And for God's sake, stop watching these people that are making YouTube videos that are not licensed, not educated, not sophisticated in their understanding or ability to help you. If you go to someone who's spewing trash and garbage about the reverse mortgage, they're not going to be able to help you. And if you don't have a game plan, and if you don't want to take my game plan, which is the reverse mortgage, come up with a better variation that will not make you end up in foreclosure when you're 75, 80, 85 years old. Put yourself on a different plan where you won't be like these seniors that are now facing foreclosure. I mean, it breaks my heart. Here it is, I'm on a Saturday, on Christmas Eve, I'm at the office making the videos, trying to implore you to make some sort of a plan that is a proper blueprint that can carry you to the end. You know, you're in your third quarter of your life, your fourth quarter of your life, and if you still have to struggle with coming up with $2,100 of monthly mortgage payments for another 5-10 years, then what is the benefit of having a house that's got $700,000 worth of equity to it if you can't access it? You can live in this house, access a portion of the equity, and not be struggling to make monthly mortgage payments. All right, I think with this video, I'm pretty much done with what I can do in attacking this point. On a personal note, I want to thank each and every one of you that watch these videos. I hope that they make a difference for you. because I know for me to do them is a labor of love, and it's really important for me for this message to get out. The senior community is going to be having a difficult time in the coming year, 2023, and that's because of the myriad of factors that we're looking into. The inflation rate is high. They're on fixed monthly incomes, and the cost of living is getting worse in terms of what the expenses are. And you know, when I've done videos about the seniors having to bridge the financial gap from where their monthly income is to what their cost and outlay of cash is, and they're relying on credit cards and running balances of, you know, $10,000 at rates that are like 30% interest rate on a credit card to use that money to make ends meet. That's a substantial financial struggle. And my point to you is, you don't have to suffer. You don't have to be in this position where every month you're trying to just make ends meet and struggle. If you don't think that the reverse mortgage is for you, there's a reason why you think so. There's a mental hesitation. There is a resistance, okay? And unless and until you bring that resistance out, and it's like going to a therapist, and unless I say, look, what's causing me to feel the way I do, I can't get the proper help that I need. And the proper help doesn't come from the people on YouTube that are not licensed, that are not educated. Dave Ramsey's opinion on reverse mortgages that you're clinging on to and thinking Dave Ramsey says it, so must be the gospel. Dave Ramsey's not going to pay your mortgage payment. Dave Ramsey hasn't said one thing about these number of seniors, which is, I mean, when you think about these numbers, 236,000 seniors have no confidence that they can make their next monthly mortgage payment. 136,480 seniors sometimes don't have enough money to help pay for their food and their monthly expenses. Dave Ramsey is not stepping in, writing in checks to these seniors that have a traditional mortgage that are in this position. And that's what I keep on going to, is that these are not seniors that are in this position because they have a reverse mortgage. If you're stuck, if you can't get beyond the fact that it's a reverse mortgage, what is it? Because we've talked about the aspects that I know are important to what I believe is holding you back. But if there's something else, let me know. And if I can help you and help other seniors by addressing it and doing videos, I'll be more than happy to do it, okay? All right, so I'm gonna see if I could knock out another video or two today before I go home. These are heavy subjects. I know I don't want to like labor you with them, but if I don't do it, who's going to? If I don't bring up these topics and try to put them into the proper perspective for you to help you and make you have better decisions before you reach this position where there's no more gas in the car and you're in the middle of the desert, then I'm not doing my job. I wish you and your family a very Merry Christmas, a Happy Hanukkah, Happy Holidays to everybody, wherever you are. I hope you're safe, and I hope you have comfort, peace, joy, and financial independence and financial dignity in your life. God bless you. Thank you for giving me the opportunity to share these videos and these topics with you. And I hope that if I can make the difference for one senior, if I can know that one person's life has improved because of the suggestions that I've made, and as a result of it, they've considered an alternative that they hadn't considered, that one person makes all of these videos worthwhile. With that in mind, if you know someone that could benefit from this, please share these topics with them, share these conversations with them, share these videos with them. If you're a CPA, an elder law attorney, if you're a financial advisor, if you work with seniors who you know they're having a hard time and this can help them, please put this in front of them and let them be able to have a better quality of life. God bless you. Thank you for being my client. I look forward to the next video, and Merry Christmas.